Hello, Nilesh, and welcome to the show.
Thank you, Puneet, for having me over here.
I'll begin by asking you, do you think that the policymakers are in a move to catch up with reality and surging inflation may overdo things and cause much more damage to the economy and markets than what's needed?
So it's always easy to judge in the hindsight, but I do believe this film will be in two parts. First part where policymakers will tighten liquidity, raise interest rates, control demand or reduce demand in order to control inflation. And then there will be a brief intermission. In the second half, the same regulators will probably take steps to support growth. Now, it could be again combination of same steps, cutting down rates, providing liquidity, providing stimulus. So there will be undoubtedly two phases, two cycles. We just have to hope and pray that regulators exactly know to take the step out of the pedal.
The sell-off that we have seen in equity markets across the globe could actually be in two phases.
No.
Or could the second phase be, more of a relief rally from that the first step is over?
Absolutely. Equity market always moves in anticipation. So right now they are discounting the first half of the movie because they don't know where this movie is going to have an intermission. So today they are pricing in tightening liquidity, lower interest rates, slowing growth, reduction in demand, in some countries even recession. But the same markets over a period of time, once they realize that central bankers will be back to the growth support, then they'll start discounting, increasing liquidity, falling interest rates, pro-growth measures. But we don't know how long the first half of the movie is going to last.
On a scale of 1 to 10, 1 actually being the biggest spot of bother, how would you rate the Indian economy, let's say 6 months ago and now? Do you think that the next 6 months will be even more painful for the Indian economy and markets?
So undoubtedly today we are oasis in the desert. Undoubtedly our rahu kaalam has started as oil prices have gone up. Right now we are seeing triple-digit oil prices, higher inflation, FPI outflows, and clearly growth will be taking a hit. If 6 months down the line, we have one scenario where Russia, Ukraine is settled out, oil prices are in double digit, globally central bankers have controlled inflation and are now taking steps to support growth, we will be in a far better situation. On the other hand, if the situation continues to deteriorate, Russia has escalated Ukraine situation, central bankers haven't controlled inflation and they are still in tightening mode, and central governments are not taking pro-growth steps in order to control inflation, then we could be in a serious situation than what we are today.
There was a time when diversification into other geographies and markets was being advocated to investors to catch the rising stars globally. Then there was this Kotak Global Innovation Fund that has seen some negative return over the past since inception, about 39-40%. So what went wrong here? One, two is that do you still advocate investing into other geographies, given the way markets are, given the way US indices have performed, and given the way Europe is actually doing?
So we advocated allocation in offshore assets to diversify your portfolio. Since we don't know how to manage this funds, this stocks or this markets, we tied up with whom we thought is one of the finest in the craft. We tied up with Wellington Asset Management. They manage more than $1 trillion. They are in existence for almost 100 years. They are investment manager of repute. This fund was launched in somewhere middle of 2021. And thereafter, a series of events have happened which we had not anticipated at the time of launch. Immediately after launch, China cracked down on its technology stocks. Their index came down by 70%. No one had anticipated that. because valuation-wise Chinese tech companies were doing reasonably well. But the whole business model shifted from profit to charity. The second thing that happened in this set of companies was US interest rates and inflation. Suddenly, the companies which were loss-making or which were dependent upon external capital got derated significantly. The third thing which happened was when markets become attractive to invest into, there was a cap on the overseas investment limit. So we couldn't even tell people to average into global innovation fund. Now, yesterday, SEBI has announced some relaxation. Our recommendation to investor is that treat global innovation fund as a high risk, high return fund. It gives you diversification into overseas companies, which are generally not present in India. As I mentioned now, since they have corrected a lot, the valuations have become far more reasonable. If your risk appetite permits, this is the time to average into global innovation. We tried what was humanly possible in our capabilities to provide a better product to our investors. Unfortunately, for the last almost a year since it is launched, it hasn't worked well for investors.
Thank you, Nilesh, for your time today. We sincerely hope that the Rahu Kal for the markets and the economy ends soon. We hope to see you soon.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.